Merry Christmas and Happy New Year in a couple days to all the gold and silver stackers, all the subscribers, all the people watching today. I appreciate your patronage and your comments. I just wanted to share with you some coins that I've purchased recently. On 16 December, when silver was trading between 62 and I believe $65 an ounce, I picked up how many was it? I believe 10. I bought 10 Libertads. I've since put them in this. They didn't come in a mint tube. And at the time, of course, that was a high for silver when I bought these, December 16th. I paid a total of, I believe, $720. So actually, yes, $72. At the time, that was a $7 per coin premium. That's kind of why I wanted to show it to you. So I was finding that if you can get Libertads for what essentially the premium on American Silver Eagle is going to be, I'm going to choose the Libertad over the American Silver Eagle simply because of the mintage numbers. And then what's interesting, or maybe I then found out they had four. I knew they had four more coins. I just didn't have the money at the time. So December 26th, when silver was $75 an ounce, I went ahead and bought four more Libertads. And these I paid, I believe it was $82 a piece. So I think it's important that folks recognize or realize that premiums are diminishing. In fact, if someone was looking to pick up junk silver or let's say higher grade junk silver, Morgan dollars and peace dollars, I found that you can get certified PCGS coins if you're paying attention on eBay at spot. There's just too many coins out there for a person to reprice. So I found at least 8 different examples of Morgan dollars that were certified PCGS. Now some of them were clean. Some were detailed. Some were EF. I think there was a one mint state coin in there, but these were coins that probably were priced back when silver was 45, 50 bucks, and people are just trying to get rid of their, Morgans. I myself have some PCGS Morgans that were clean or detailed that I have up for sale, and as the spot of silver has gone up, I've adjusted those prices accordingly, looking for $5 to $10 over, at least a $5 to $10 premium is what I'm looking for. But there's plenty of deals out there if you're looking just to accumulate a pile of silver. The reason I mentioned slabbed is I think there's a point where it's not worth the risk of, unfortunately, the fake coins that might be out there. There's a point where why take the risk on buying a raw Morgan or peace dollar when there's enough good deals to be had for slabbed coins. So I just wanted to show these to you. I did want to go over, wow, look at that. That's a sharp looking 1983. I really got excited when I saw these, to be honest with you. When you're paying under, it was right at a little bit, around 10%. I agree that might be a little high in some places, other places it's not, but 10% premium on a Libertad right now is, I think, a fair deal given the mintage numbers and the interest in Libertads. So in 1983, 1 million of these coins were struck, such as the one I'm holding here, 1 million. Let's look at another one to see if I've got another year. Okay, 1985, 2 million were struck. And what else do I have here? Another 1983. 1983. Okay, 1983. Huh. 1984. Okay. 1.01 million. So 1,010,000 of these are struck. And we've talked about this before. Year tools probably have over 20 million versus a million, which would be a 1 to 20 ratio. Yeah, these are nice looking coins. Here's one with some toning. Maybe it was on the end. It's another 85. Got a little bit of a purplish patina. I like that as much as I like a brilliant coin. Okay, so just wanted to discuss for a few minutes. I haven't really been talking to you about my personal thoughts on where silver and gold's going. There's a lot of folks that do that, and there's a lot of folks that do a good job building graphs to show or to make a point. But let's just agree on a few things in terms of what are some of the factors that are driving silver and gold higher. One is the inflation that we know exists, as well as the quantitative easing, that is currency debasement, or at least the fear of currency debasement, which is pushing investors towards hard assets like real estate and other commodities. Second reason is, at least in the U.S., there's an expectation of lower interest rates, which make non-yielding metals more attractive, right? If you're going to put your money in a money market and you're going to get really low interest rates, well, maybe you take the risk on buying or investing in precious metals. Third reason is industrial demand. I'm sure you've been hearing a lot about it. I don't have the numbers in front of me. I will maybe in another YouTube video go ahead and talk about specific numbers. But as I said, these are factors that most people commonly agree to, that silver's role in solar panels, electric vehicles, electronics, data centers is all increasing, including war munitions. And that increase is causing, or at least it's causing people to speculate on investing in silver. Reason 4 is right now there's a tight mine supply. Silver is often a byproduct of other extractions techniques, and that limits rapid supply growth, as well as the amount of time it takes to extract silver from the ground to open a new mine. A fifth reason is gold has been setting new highs, and historically when gold moves, silver follows. And I would say a sixth reason that hasn't been talked a ton about is the paper versus physical silver aspect. Right now, there is a growing disconnect between the paper silver market and physical silver reality. So right now, for the last 40 years, silver price has been mostly set by paper contracts, futures, options, ETFs, where hundreds of ounces trade on paper for every ounce of physical silver. And this system works only if most traders accept cash settlement and never demand delivery. But silver is different from gold. Silver does get consumed, and once it's used in technology, much of it is gone forever. So as physical demand increases, the paper market begins to get strained. And some of the warning signs that I've read about, especially when silver rises fast, as it has over the last month with a 20% increase, and even almost a 10% increase the day after Christmas, is that the rules change for the markets as well as, or for the exchanges, as well as margin increases. So margins have been raised for silver. It forces traders to post more cash and it reduces participation rates. So essentially, this happened in the 80s when silver ran towards $50. Exchanges imposed margin hikes and liquidation-only rules. That volatility exploded as physical demand overwhelmed paper controls. In 2011, silver surged from under 20 to nearly 50, and the CME exchange, raised margins 5 times in 9 days, forcing leveraged traders out and causing a sharp pullback. In both these cases, margin hikes didn't signal abundance, they signaled stress. And another red flag is the growing reliance on cash settlement instead of physical delivery. If metal were plentiful, delivery wouldn't be discouraged. Paper silver can be created instantly, physical silver cannot. So when confidence in paper promises fades, price discovery moves to physical premiums and real metal transactions. What does this all mean for us silver stackers and gold stackers? As much as I only give you a number based on other people that I've heard and I respect, and I believe the numbers make sense. But right now, most people are expecting in 2026 to see silver between $100 and $140 an ounce. And even if that doesn't happen, I think that what's driving the market, they always say that we're too small, the retail, folks like us are too small to really move the market. But I do think that the explosion of exchange-traded funds and the explosion of interest in speculating with silver is going to cause silver to be traded almost like a stock, unfortunately, as an equity. And so I think we're going to have a lot of volatility. I do think there will be some pullbacks as people try to take profit. And I think you just need to be prepared to continue dollar cost averaging. And we can talk about it in another segment. But essentially, we're at all-time highs. And although not inflation-adjusted all-time highs, we're still at all-time highs. And if you're someone that has a significant portion of your net worth in silver, I would say greater than 10%, then I think you should consider essentially selling off a certain percentage and capturing these gains as it continues. If it goes down, great. If it goes up, you didn't sell everything out. But I think it's worthwhile to consider taking a profit. I've been in the game for over 25 years, and I have a significant stake in silver that was purchased back when silver was $11, $12. And over essentially a 25-year period, I earned 8.8% annualized return. So a lot of these people that are talking about a 1-year, 2-year gain, hey, that's great. But I've lived through over 25 years, and I have a 8.8% annualized return. Not complaining, not saying I'm not happy about it, not saying it didn't give me some comfort to have that type of insurance policy, but for a lot of us, we've been waiting a long time for this type of breakout. We've been waiting a long time for the potential of fiat currency collapse. And if you're one of those people that have waited a long time, then you know what I'm talking about. You've seen the ups and downs, and I think that for some of you stackers, it's worth considering, taking advantage and selling a portion. Otherwise, I do think that in the long term, silver will continue to appreciate in value, or at least maintain value as the dollar is debased. Thank you very much. I appreciate you guys liking and subscribing and making comments. Thank you.